All right, we'll get the latest business news now, and we'll start with a stark warning to the U.S. government over its inability to reach a deal on raising the debt ceiling. That warning coming from ratings agency Fitch. Our business editor, Charles Pellegrin, is here on set with the details. Hi, Charles.
Hi. The U.S. is keeping its AAA rating, but Fitch has put that rating on watch for a possible downgrade. As a reminder, these ratings basically help people judge the ability of the U.S. To honor its debt. Now, Fitch issued a statement on Wednesday evening saying that increased political partisanship is hindering reaching a resolution, and that the brinkmanship over the debt ceiling, failure of the U.S. authorities to meaningfully tackle medium-term fiscal challenges that will lead to rising budget deficits and a growing debt burden signal downside risks to U.S. creditworthiness. Now, Fitch, though, still expects a deal to be reached. This warning came after White House and Republican negotiators met for yet another round of talks. House Majority Leader Kevin McCarthy sought to reassure investors that Congress will be able to find a way out of the impasse. But the ex-date of June 1st is fast approaching, after which the government would start being unable to meet its payment obligations.
There would be an immediate economic hit because government would have to cut government spending by about 4.5% to 5% of GDP. And there would be significant financial dislocations in the form of severe plunge in stock prices, a rise in volatility on financial markets, as well as a potential significantly negative hit to both consumer and business confidence.
Well, that debt ceiling mess is having an impact on the debt markets, as you can imagine, with U.S. Treasury bills that are scheduled to mature in early June, selling with increasingly high yields because of the risk of default. It's also having an impact on the stock markets, with all major U.S. indices closing down, with spillover on the Asian trading this Thursday morning, except for the Nikkei in Tokyo, closing up over 1/3%. But the Hang Seng in Hong Kong down almost 2%, and the Kospi in Seoul down by 0.5%. This after the Reserve Bank of Korea left its rates unchanged for the third consecutive time this Thursday. The picture a bit different in Europe at the open, not quite different, with all the stocks there opening lower, with hopes before that future showing that it could be slightly above the flat line. But the FTSE in London down 1/3%, and the Paris CAC 40 down almost 0.2%. So those U.S. debt ceiling jitters are still very prominent there. Germany fell into a recession around the turn of the year, according to the latest official figures. In the first 3 months of the year, Europe's largest economy contracted by 0.3%. This was revised down from a previous estimate of 0%. This is the second consecutive quarter of negative growth, which is the technical definition of a recession. Germany's been battling an energy crisis after Russia's invasion of Ukraine, with soaring prices weighing on consumer demand and economic output. Technical glitches and malfunctions marred Florida Governor Ron DeSantis's big announcement that he's running for president of the United States. The governor's hyped Twitter Spaces appearance was 20 minutes late in starting, repeatedly lost sound, and many users said they had trouble logging in. Well, since Elon Musk took the reins at the tech company, well, Twitter has struggled with a myriad of problems. Catherine Viet has more.
50,000 a minute.
It was supposed to be Twitter's big moment, but in the end, it was more fiasco than triumph.
All right, we're just reallocating more server capability to be able to handle the load here. It's really going crazy.
Florida Governor Ron DeSantis agreed to announce his presidential bid on Twitter Spaces, but things didn't go according to plan.
His commitment to freedom and his willingness to put his money where
there were technical glitches. People were getting kicked out. You could only hear keyboards clicking. You were not able to hear them talking about this.
Since taking over Twitter in October, Elon Musk has lurched from one crisis to the next at the tech company. In a bid to stem losses that Musk claimed amounted to $4 million a day, he fired more than half the company's workforce. This included many of the engineers necessary to ensure the smooth functioning of the site and technical troubleshooting. Under his leadership, advertisers have fled the platform after Musk agreed to reinstate some users like Donald Trump, who had been banned for violating the company's policies. In an attempt to make Twitter more profitable, Musk also changed the blue tick verification symbol into a paid subscription service. The rollout was marred by imposter accounts of famous people and has largely failed to reach its targets. Governor DeSantis's hyped appearance was meant to showcase Twitter's ability to host programs on its site. Former Fox News host Tucker Carlson announced he would reproduce his popular program there, but that was before the rocky rollout for the governor's announcement.
Still more tough times ahead for Twitter, it seems.
Indeed. Charles Pellegrin with Business. Thank you.